Lizzie, what is your take on the start to the holiday shopping season?
Well, it looks to be good. Hopefully, it's interesting because the consumer right now seems to be disregarding some negative signs and looking only at the positive. At the end of the day, what you look at is what's happening at home, and there's record unemployment. People have jobs; they want to shop.
Yeah, I definitely saw that at Walmart. Was in the stores yesterday on Walmart. The crowds were there. Noah, let's get you into this mix here. I'm not seeing a lot of big moves in the retail stocks in the early going here. What's your take in the early going?
It feels like it's been a little bit quiet, at least from a foot traffic perspective. I know you're seeing some, certainly in some areas, and I don't have a sense of is more of that shopping being pushed online, but it definitely feels like I'm seeing more of a retail push from various different areas. I had 10 or 15 different apps send me notifications of Black Friday sales, and so there's a very aggressive push. I'll be curious to see what the numbers actually look like and where they're coming from, in store versus online.
Do you think there could be some downside risk to these retail stocks? If all these sales have shifted to online, that's a less profitable avenue for most of these retailers.
It's true, and they're price sensitive as well, so they're going to be buying some of the lower margin products. So it can make it challenging, but it's an improvement, right? When you're a company like a Walmart or a Macy's or a Target and you're trying to grow that online presence, you're probably willing to trade that off in the short term to build a bigger online presence and compete against Amazon.
Mm-hmm. Lizzie, do you have any interest in getting involved in retail stocks?
So it's an interesting scenario because what you have is it's kind of a tale of two cities. You have the retail stocks that are failing miserably, right, and the traditional brick and mortar, and then you have these really interesting companies such as Target, Walmart, those that are really adjusting and working with the convenience, the online. Those are the ones that we see that are going to have success in the markets.
How do you read through on Amazon? We haven't mentioned Amazon here. Walmart and Target are doing so many good things. Amazon stock ahead of Black Friday has lagged the market.
Right, and what happens is when you have, it's kind of like Netflix as well. As soon as you start to see that people are changing and adapting and competing, those traditional companies like Amazon aren't going to do as well as they had before when they were the only ones in the market.
Noah, do you essentially short the heck out of Amazon here? If Target and Walmart are doing so great, what do you do at Amazon?
I think so. So much competition ahead of them, not just on the retail side of things, right, on the cloud side of the business as well. So a lot more challenges ahead. Doesn't make them a bad company, but it might make companies like Target and Walmart a better opportunity over the next 5 or 10 years. And
there you have the opening bell on this Black Friday. The market is looking to open down about 60 points on the Dow, down about 65 points nonetheless. You made a good point, Lizzie, on Netflix. Do you hold Netflix? Do you like Netflix? The streaming wars are full in effect.
Yeah, so they are full in effect, and you've got Disney. I mean, my kids have been bugging me for a week and a half now to get Disney Plus.
Did you get it?
Yes.
Well, if you're a Verizon subscriber, our parent company,
thank you. Because of Verizon, we had to reset our passwords. It was really special just to get the Disney Plus to save the $6 a month. So, and actually, what you see is a lot of pressure in companies or against companies like Netflix. I don't know if the question, if we say hold on that, but I will say that you're going to see a lot of pressure with companies like Netflix in the future because it's the same play as Amazon. You've got a lot of people finally saying, hey, well, let's get into this market as well.
Is Disney just the ultimate play here?
That's a good question because Disney seems to always come in and do so well, and they're seeming to get a lot of traction in this. And with doing things like giving it to free to a Verizon subscriber, after a year you're going to still be on the thing, and now your kids are not going to want to get off. Yeah. So I mean, I see a pretty interesting play in Disney as well.
Interesting. Jared, over to you at the Wi-Fi Interactive board.
Yeah, we're looking at the NASDAQ 100 heat map here, and we can see the FANG cohort, except for Amazon in the red. Apple's off 0.5%, Microsoft off 0.25%. But again, these stocks, as we know, coming off record highs. So not surprising that Amazon might be up because it is Black Friday here. Alphabet is down 0.5%. One standout is Starbucks. That's up 0.8%. We can see it's up 34% year to date. It's still about 5-6% off of its record highs, though. And then if we take a look at the Dow here, we can see that Walmart is in the lead, along with Nike, McDonald's, so definitely consumer names leading here. And then to the downside, the industrial company Caterpillar is down 1%, and then United Health, the second biggest contributor to the Dow by points, that is down 1%.
Hey, Jared, can you pull up an Apple chart real quickly? I think by most accounts, a lot of the data that I'm seeing out there, Apple and even to a lesser extent Roku are early winners this Black Friday.
Yeah, well, if we take a look at Apple here, I mean, this stock has been notching high after high, record high after record high, up 69% year to date, seemingly impervious to any bad news. You look at the pullbacks here, they're virtually non-existent as it's marched its way up here. It's been on an incredible run this year, and it's really been strong throughout thick and thin. The biggest drawdown it had was during the tariff escalation in May, and even this wasn't a very big drop right here.
Noah, back to you. We were just talking a little bit about the streaming wars. What's your big play on streaming in 2020?
It's a good question. You know, I have to say, at least in one of our all-short equity funds, HDGE, Netflix is our top short right there. Again, doesn't make it a bad company. It just means probably a lot of earnings pressure. I have not signed up for Disney Plus yet, but I have Hulu and I have ESPN Plus, so I actually can get Disney Plus and probably save a little money there. So I see Disney, the whole company overall, not just the streaming service, being a positive opportunity in people's portfolio. Netflix could continue to have some challenges ahead.
So it sounds as if you're almost betting that Netflix lags the market in 2020?
I think so. Yeah, I think so. I think they'll struggle quite a bit.
Well, Lizzie, you know, we had some news this morning from Tech Data that Warren Buffett was reportedly made a bid in here. We've had some M&A, a lot of M&A activity in recent weeks. Tiffany, Louis Vuitton,
right.
Schwab, TD Ameritrade. You think the floodgate is about to open over the next couple of weeks?
So, you know, what's interesting is this past year is we've seen these companies like WeWork, or we've seen these unicorn companies. There's a lot of faltering in that. But people are looking for solid investments, and they're still looking for it. So Warren Buffett was looking for it, and you're right. With the Tiffany play, it's the same thing. So I think what you're going to see is not necessarily floodgates, but what you're going to see is an investments in solid earning companies that have a real background to be able to invest in, rather than pie in the sky.
You know what it tells me is, though, there is a lot of value still left in this market.
Yeah.
Despite the major indices being up, what, almost 30% on the year, Dow, NASDAQ, people still see value.
So, you know, and I have people ask that every day is, are we at the top? Are we at the top? How do we know? We have no idea whether we're at the top. All we know is that volatility will always be there, but there's always opportunities when you have solid companies with solid fundamentals, and that's what's important.
You know, when you talk to clients, do you get the sense that there's some FOMO getting ready to emerge, that fear of missing out?
Yeah.
You could see some money climb back into these markets, the next wave, let's say over the next 3 months?
Oh man, there's always fear. And it's funny, when it's down, people have fear. When it's up, they have fear. And you know, it's consistent and it's always right. That what you need to do is dollar cost average your money in, invest in a good basket of allocation, and diversify your assets. When you do that over time, you're always going to succeed.
Noah, what's your take on the M&A environment right now?
I think you'll see a lot more of it, certainly with interest rates being so low, buybacks, you know, being used with some of that cash flow that companies have. Acquisitions could certainly be on the move. So you want to start to look at, and we saw it moving last week. Certainly the small cap and the micro cap space could find some interesting opportunities either for your portfolio or for what we would see bigger companies making some target acquisitions in the space. Any
key ETFs you can highlight?
Well, so for our own in the small cap and micro cap space, we have two. SCAP is a small cap ETF, and DWMC is a micro cap ETF. That one has had an incredible year, outperforming the indexes. And I think, just like she mentioned, you know, you got to be smart about the basket of securities you want in that portfolio. I think we're continuing to move into a market, and we've seen that a little bit this year, where all the stocks aren't going to move up in unison. And so knowing what you have is important.
Jared, back to you.
Well, we have the NASDAQ 100 month-to-date heat map, so we're going to take a look at what's happened in November. Autodesk, a big winner here, up 22%. Regeneron up 20%, 21%, and we've seen healthcare really make a comeback. And then we have some big names like Baidu out of China, AMD, both up over 15%. To the downside, Expedia is a big loser, down 25%. Some of these are earnings stories, but let's go to the sectors, and this is going to be month-to-date as well. We can see healthcare in the lead, just edging out tech there, up 5.3% versus 5.2%. Healthcare really made a comeback this month. Financials, industrials, and communication services, those are all outpacing the S&P 500. To the downside, we have the defensive sectors, utilities, and real estate. 10-year Treasury yields up about 8-9 basis points this month net, had been up 28. And if we take a look at the quarter to date, similar story here. Healthcare up 10.6%, tech up 9%, financials, communication services, industrials, all outperforming, and that's why we have this incredible run here. Lots of breadth in the market, and that's not surprising while we're going to new highs just about every day.
Lizzie, one more for you. I'll leave it with you. I'll put you on the spot here. What's a good investment for the next decade?
For the next decade?
Or a theme.
Yeah, you know what? I think that you look at the U.S. and the U.S. itself, when we stick domestically, we've done really, really well. So if someone says, just give me one place to invest in, I would say the strong companies, the U.S., the large cap, the value. We really believe in that. We believe in strong fundamentals. And when you have that, it's really hard to fail.